Good morning, everybody. Russell Moore coming to you live. The channel is dedicated to financial literacy, and we are dedicated. We are dedicated to financial literacy. Amen. So, good morning, everyone. It's Monday morning, 9:30 Pacific time. I'm here on the West Coast, Camarillo, California, just about an hour away from Los Angeles, LA, where the LA Lakers live, and the Los Angeles Rams. By the way, 3-0. Give it up for the Rams. We beat. Hey, Brady. Sorry, buddy. We got you. We got you, Brady. We got you. Anyway, good morning, everybody. How you doing? Um, First of all, I want to do a quick update of what's happening with the stock market. The stock market is kind of choppy today. It's just kind of undecisive. The S&P 500 was about 20 minutes. The last 20 minutes when I checked, it was about 8 points under, 8 points in the red. Um, the Dow, 147 points up the Dow, and then the Nasdaq was 100 points down. So S&P 500 8 points down, Nasdaq 100 points down, and the Dow was 147 to 148 points up. We'll see how it ends, okay? Keep an eye on the market, all you traders out there and investors. Now, this channel is really about um, financial literacy, teaching people about how to be financially literate. And so we go over various different things. We go over housing. The last few episodes, I've been talking about ADUs, accessory dwelling units, and how valuable they are, especially particularly in Los Angeles right now, and how so many African Americans do not know. Not just African Americans, but particularly the black and the brown. A lot of them do not know anything about ADUs and the power of having an ADU if you own property in Los Angeles. Because why? The inventory is so low. Homelessness is up. We need housing. We need housing. And so the state of California has actually passed several assembly bills. And I went over it in these other episodes, so I'm not going to go over it today. But they have passed a lot of things that have made it, first of all, cheaper to build an ADU on your property. They've removed some of the stipulations and all the resistance, and it's a lot of things that they've done. Okay, I would encourage you. I would encourage you. Google ADU in California. Okay, so we talk about budgeting. We talk about getting out of debt. We talking about credit, getting your credit right, getting your credit together. You know, a lot of people, they have all these different hacks on how uh, to improve your credit score. You know how you want to improve your credit score? Pay them. Pay the people you owe. Owe no man but love. That's all you should owe them is love. Pay them. Your credit score will go up. Get rid of all that debt. Begin to say no to McDonald's. End your Netflix subscription. Take that money and put it on a debt. Put it on a credit card debt. Say no to some of your luxuries until you get out of debt, and then you can splurge a little bit. I'm not against Netflix. I'm not against subscription. We got to live. We got to enjoy life. I get it, but not at the expense of being in debt. Say no to Starbucks for about 6 months and take that $500 that you've been spending monthly on Starbucks and take that and put it on a credit card that you owe, or that Home Depot card, Lowe's, that J.C. Penney card, whatever card. Begin to look at your debt and attack it. Attack your debt. And if you attack your debt, great things await your future. You'll have the freedom to do so much more when your credit is much better. You know, I was looking at our credit score, me and my wife, and I'm not bragging. This is not bragging. It's taken hard work and a lot of discipline. We've had to say no to a lot of things, including going on vacation for the last 2 years. We've had to say no. I was looking at it, my wife's credit score is around 780, 790, and I'm at 775. We're right behind each other, close to, depending on which credit bureau you're looking at. One of my credit bureaus around 790. But our goal by the end of this year is to be at 800 and there and stay there. Okay. So make that your goal. Tell yourself, look, I want to be here at a certain place as far as my credit score is concerned. And then begin to make a plan on how you're going to get there. But I would say that about credit score. You want your credit score to improve, pay off your debts. All right. And a lot of people say, well, you can call them and give us a settlement. Settle with them. Well, they didn't settle with you when they loaned you the money. They didn't say, well, we'll give you a partial of what you're asking for. It wouldn't have met your need. I'm just saying, gang. I'm just saying. They did not give you a settlement. Do the right thing. One thing that I push, this is what I do, this is what I push with anybody I coach as far as finances, is integrity. So I don't tell them to get a settlement. Now, if you have to do that, okay. If you absolutely have to. But keep in mind, they did not give you a settlement when they lended you the money. They gave you what you asked for, if for what you qualified for. Okay? All right. Let me get off my rant. All right, today I just want to talk about one quick thing. And one of the things that I'm doing with my channel is that I'm not going to be long. These segments are not going to be long. I know that you're busy. I know that you don't have time to just sit there and listen to people just grabble. It's got to be something that's going to benefit you. And so one of the things with this channel, I deal with financial literacy, but I talk about the stock market. I talk about stocks, but it's basically for newbies, new investors, those that are new to the stock market. Particularly, of course, this is not for institutional investors. This is not for the mutual fund guys. This is not for the hedge funds. No, they're not going to be looking at something like this. This is for the retail investor. You're brand new to the market. You don't know what you're doing. You lose money one week, you make money the next, but you haven't been making any gains. Here's what I want to talk about. Why am I not making gains in the stock market? I'm new and I'm not making any gains. Number one, I say this all the time. Anybody that knows me and checks out my channel, this is what I say all the time. If you do not learn, you will not earn. I'm going to say that again. I was mixing it up in my mind. If you do not learn, you will not earn. Number one, learn as much as you can. Read books about the stock market. Read about charts and the value of knowing charts. Read about trends. Read about technical analyzing. Read about fundamental analyzing, which is what I push a lot. Because it means that fundamentals. If a company is fundamentally sound, they have a good leadership and executive team. Excuse me. Their PE ratio is strong. Their profit margin strong. Revenue strong. Cash flow strong. Are they growing? Do they have a competitive edge? Those are fundamentals. Now, I'm not saying that technical analyzing is not as bad. In fact, I think you should learn both. But the first thing you want to do is, if you don't learn, you will not earn. So you got to learn. Okay. Now, it's not just about learning and getting a bunch of information. Practice. Number two, get on a platform, and there's a lot of, most of the platforms will have practice sessions. Okay. Where you can what they call paper trade. It's not real money. It's a simulation. So get on there and practice, because this one of the values of that is that because you're not trading your real money, your personal money, you'll be more free to take risk, and that's how you learn. The fearful will be tearful. Let me say that again. I said the fearful in investing in the stock market will become tearful. So simulation trading will help you break a lot of your fears. Now, once you get your real money, you still got to attack fear. So paper trade, okay? Number three, get a plan. Decide what you want to be. Number three, decide what kind of a trader or investor you want to be. I like to put them into three categories. Day trade. Here's the thing about day trade, though. Usually, because of there's a day trading rule from the SEC, a day trading rule. You cannot exceed more than 4 trades a week. And then if you have those four, you got to wait a week unless you have $25,000 in your account. So unless you have $25,000 in your account, you're going to be limited on their day trading. So I never suggest to anybody that's just starting out to day trade unless they have 25,000. And even if you have 25,000, you need to be a little bit more experienced because the decisions you're going to have to make are a little bit quicker. You're getting in and out of different trades. It's going to require a little bit more. So that's the next category or the next area is swing trading. Swing trading. Swing trading is, and day trading, by the way, is day trading. It's you buy that one day and you sell that same day. Okay? Day trade. That's pretty simple, right? Swing trading is anything from a day and after a day. So you buy the stock today, you sell it 2 days from now, 3 weeks, a month. That's swing trading. And then there's positional trading or long term trading, where you buy and you hold it. You have no intentions on selling it. You're looking for gains. A perfect example of that is Warren Buffett. Warren Buffett is probably the greatest of all time, unless you add Benjamin Graham in there, who's The Intelligent Investor. That's a great book to read, by the way. So, long term. So you got to choose which one am I? I do all three. I grew into that though. I do some day trading. I definitely do swing trading. That's mostly me. And then and then lastly, I have some long term trading. And each of those are in different platforms. So my Fidelity account is for long term. It's more buy and hold, positional trading. My Robinhood, I do options, and it's a lot of swing trading and day trading. And then I have Ameritrade, TD Ameritrade, which is mainly swing trading. So my day trading is more in my Robinhood account. Okay, day trading, and I do some swing trading in that as well as options. Okay, this is not about options. If you're new, I know you want to make money. Here's the other thing I want to say. Number four, you must deal with your emotions. What I mean by that, you must make a decision that I'm not going to let my emotions rule my trading. There will be times when everything in you is going to be telling you, screaming at you, sell this stock. And your feelings, because say it's going down. And here's what a lot of new traders do. The stock starts going down and they're like, oh no, I made a mistake. And then they sell it. Here's what you have to remember. You have not lost any money. Just because the stock goes down does not mean you have lost money. You lose money when you sell it after it's gone down. And many times, let me tell you, there's an old saying, what goes up must come down. What goes down usually goes up at one point. It will go back up. Perfect example, MGM Resorts. Pandemic, it was at $12. You guys, it had sunk down from I think the previous high was 50 something dollars, and it went down to $12. And I had, I people were selling it, selling it, selling it. Held it. Do you know where it is now? We're talking about a little over a year later, year and a half later, 18 months later. MGM Resorts is at $44 today. Just when the pandemic started, it went down to 12. Probably, I think it was less than that, $10. If I let my feelings run me and tell me what to do, I would have sold it. You buy on the dip. That's my next point. Buy on the dip. Buy on the dip. Wait and buy on the dip. Load up catch it when it's on a discount and hold it. It'll make money for you. People that were disciplined and patient are making money this year because the market is not doing this. It's not doing what Tesla did. Yeah, I rode the Tesla wave too. I was on it. I was on my little Tesla surfboard and I rode the wave. But that most stocks aren't doing that. They'll do this, an upward trend slowly over time. And you have to be willing to wait it out. You have to be willing to wait it out. This is it. I told you I was going to be, I gave you 5 good points. Okay? You can be a great trader. You can be a great investor. Save your money, get out of debt, invest in the stock market, and don't forget to get some land or some property at a house. Get some property too, so that your portfolio is diversified. Hey, everybody that's doing these channels and putting out content, they do it because they really care. At least I hope so. Let me give you a few people that I want to recommend. I don't recommend a lot of people, but on YouTube, I will recommend these 3. Number 1, as far as the stock market is concerned, Jeremy with Financial Education. Jeremy, that's his name. Jeremy, Financial Education. YouTube him. A lot of knowledge. You can tell he's done a lot of research. I do a lot of research myself, but that's not what kind of channel this is. I just want to encourage people and give tidbits. Every day I'll just come on and just give tidbits. I'm doing it once a week right now, but eventually I want to get on my channel every day and just giving people little tips, hacks, investing hacks. The next guy is Meet Kevin. Meet Kevin is awesome. He ran for governor actually, and I was pulling for him, even though I voted for Larry Elder, because I'm sorry, Governor Newsom he's still doing a very bad job. Sorry, we got to be honest. Black or white, no matter what color, no matter where you are from or what side of the coin, right, left, it doesn't matter. The man has done a bad job as governor here in our state. All right, and then there's Graham Stevens. He's excellent too. The latter two, me, Kevin does deal with stocks a little bit, but I really believe that if you want to, as far as the stock market is concerned, specifically, Jeremy with Financial Education is, I think, one of the best out there, if not the best. He's very, very good. All right. So I just want to tell you guys, I love you very much. Have a wonderful, wonderful week. Hey, let's keep checking on that market. And hey, short when you can, go up when you can. But the key is you cannot time the market. You don't know that. You don't know when it's going to go. But be prepared. Make sure you leverage your risk. If you're going long, make sure you're covering yourself. And I'm not saying shorting the market. We'll talk about that one other day. But what I'm saying is make sure you manage your risk as well. We'll talk about that. All right. Have a great day. I'm sorry, you guys. I know I'll just be running my mouth. But I love you and I hope the best for you. Have a wonderful, wonderful week. All right.